Yo, what's going on, everybody? It's your boy Kyle Chartbully back with another video. And this one, I had a viewer actually reach out to me with some questions. He's been emailing me for a few weeks now, using the stuff that I show in the analysis channel, along in the videos, and been applying it. And he said his win percentage has been getting way better, but he was still confused on a few things. So, I said, let's do a Zoom call. I didn't charge him a dime. It's about 30, 35 minutes. He's a real cool guy. I'm glad he reached out to talk. So, hope you guys enjoy. Hope you guys learned something. But yeah, I can't do this for everybody that reaches out to me. But, when I can, I will. So, but yeah, that's it. Hope you guys enjoy it. Learn some. Subscribe. Leave a like. Drop a comment. I do respond back. But that's going to be it, y'all. Peace. Okay. Yeah. Whenever you're ready to get started, why don't you just tell me like how long you've been trading and what got you started?
Okay, I've started 2016, but I left trading and then I started again last year, about October, November. Yeah.
Okay.
Yeah, but yeah, I got tired, man, of working for other people. Oh, the pay isn't good, so I'd rather hustle on my own.
Right.
Yeah.
Okay. Yeah, I
And
definitely understand.
now, but I've been jumping around.
Hey, Cameron, you still here? The video's going out. Not sure if you're still with us here. Yeah, I think his internet went out. Hey, I lost you there for a second while you were talking. Can you hear me?
What's happening?
Yeah, your feed went out for a little bit. I couldn't
What's
see
happening?
or hear you.
Yeah, I don't know what's happening.
Okay, no, that's fine.
Since
So you've been trading, you said for about seems like a few years
yeah,
now. What's mainly been the strategy that you've been using? Have you been looking on
um,
YouTube or did you learn from somewhere?
just YouTube
Okay.
basically. But uh, I like your strategy now. I think you are just using clean charts, isn't it?
Yep. Yeah, just price action. No TDI,
Um,
no trend lines really. No MACD, nothing like that. So just pure price action.
uh-huh.
Yeah.
Um, so yeah, the question that I have is basically is how do you how do you just how do you get in? How do you decide what to trade today? How, yeah.
Okay. Yeah, so my suggestion always is to just trade a few pairs at a time. So I have about three or four, but mainly three pairs that I trade on any given day basis. And then when I'm doing the analysis the night before, I'm pretty much just picking which pair is going to be the best to trade for that day. So it
Mm-hmm.
might not always be gold, it might not always be EU. Even if I see usually like two good pairs I could trade, I usually only pick one pair to
Uh-huh.
trade just because it's easier to hone in. It's easier it takes less clutter off the chart. You're not worried about what GU's doing. You're not worried about this. You say, hey, maybe your maybe your pair is like U chef and you're just like, I'm just going to trade U-Chef for today. And that's all you're focused on because you already know where the market's going based upon your top-down analysis, you know?
Mm-hmm.
Yeah.
And you don't have a specific number of pips you target per day, or
Say that one more time.
you don't have a specific number of pips you target per day.
Oh, pips. No, the pips target is going to depend on the day. So usually I like to target the previous day high or low, depending if I'm on a buy or a sell. So that's usually like my TP1. And then TP2 could just be like if I cut the trade in half, if it's in profit, and let the runner go. Uh, but yeah, your targets are going to come from pretty much your daily. So hold on real quick. Let me share my screen real quick with you. Can you see my screen?
Yeah,
Okay.
I can see.
All right. So say like I'm on gold, right? And this here was my analysis on the one I did on the channel the other day. So this was my TP1 right here. And you can see that's just the previous day high because I was long on the pair. So price came the same way you see me mark the charts up every day is price came to this low and hit, and then I was targeting this high. Now with gold, I don't always hold all the time. So I took profit like around here just because you never know when it's going to retrace and come all the way back down. So your target is going to depend on your higher time frame. So like your daily. So like the next target for me would be like right here. And you see it's like the same way support and resistance is done. Price is going to move to the next zone of liquidity. So all these wicks right here, all of these are targets for you, depending if you're on a buy or a sell. So right now, the price is showing a lot of bullish momentum. You see how the candles are nice and full, pretty much. And look where this wick left off, right where this whole pool of money is, because all these wicks are is nothing but money and liquidity. Okay, so my best bet would be is to target another bullish setup, and I'm gonna target this high, and I'm gonna target price to run past this area, because in order to get to this area, what does it have to do? It has to get past here first, right? So my target is always going to be where I see it on the daily, and then all I do is you're just going to drop down, and this is where you like your target your entries. You can do from the low to the high, and this is how you find out where to get in. So say for like Monday, I'm going to be looking for price the same way you see me do an analysis. I'm going to be looking for price to get in the buy zone or the low risk buy zone. Okay. And take a look where the low risk buy zone is. Right here, where the support is, right? So chances are, if it runs this area, what's going to happen? It's probably going to keep running lower, right? Because now market structure is broken. You know about higher highs and higher lows.
Yeah.
The basics, yeah. So this here would be one structure. This would be a higher high right here, right? And this would be a higher low right here. And right here. So we got the low, high, right? You see what I'm saying? So based upon my daily, I already know where price is trying to go. It's gonna go to this area right here, right? And I already saw your emails, and you have the fib settings that I have. So all you do is you're gonna frame your setup each day from the previous day to the current day. So from the low to the high, hone in from H1 to the M15, okay? And you're trying to look for a pattern or some semblance of price showing you that it wants to go back up around this area. Does that make sense? Yeah. So your best bet is you want to see price. The best entry would be like if it came like right here, held this area, and then you saw price moving up, right? Because then you could put your stop like right down here. okay? But you're targeting something all the way up here. So notice that maybe even if price is a, and this is gold, so the stop loss is going to be a lot bigger. Even if it's 50 pips, you're still targeting 223 pips, right? And that's why I say like you don't do like 20 pips a day. You can do that, and that's fine. That's a great way to build a small account. But let's say you have 2 days of winning 20 pips, right? That's 40 pips in 2 days. And then the next day you lose, right? Let's say you lose this trade. You just lost 2 days of profit, right? Yes. But yeah, exactly. But if you're targeting somewhere and the reason for this fib is to give you a better risk to reward entry. So you're not taking price up here. Like you see how price is up here right now? I'm not looking for that. I don't want to take price up here. It's too far. Because then stop loss has to go like down here, maybe here, and you're probably gonna get stopped out because price is probably going to retrace back down because price always wants to go to a lower point, a discounted area. That's why I say discounted premiums. This whole area is a discounted area. And I know I'm throwing a lot at you right now, but pretty much what I'm trying to say is price wants to get, banks want to get to the best price point in order to get to their destination. Does that make sense?
Yeah.
So
So if it goes up until the low risk buy zone, then you go into your M1 or M5.
yeah, I see you watch that video too. So I didn't want to go that far, but yeah,
Yeah.
if price gets like in here, that's when you can hone down to your M5. So let's say, oh sorry, let me go back. My fault. So let's say price is like right here, okay? Let's say we got a nice candle down here, okay? And then it's moving around a little bit, nothing really happening, and then you see a nice bullish candle right here, right? So when you're honing down on your entry, let me go back. If I can find it where it was. I might zoom out. Sorry. Yeah, so when you're finding where your entry is, I'll go back to M5 actually. That was cleaner. So when you're honing down from the M5 to the M1, all you're doing is looking for price. You already have the area, right?
Yeah.
So when you're dropping down, you're just getting a better entry. So maybe this candle on a 5 minute is bullish like this. You could take that entry right here. So remember how the M15 was like a 50 pip stop loss? So now we cut that to a 40.
That's
So
better.
exactly. And now but you're still targeting the same high, right?
Yeah.
Yeah. So you're still targeting the same area. That doesn't change. Now you can take profit along the way. Let's say you get like up here and you start seeing like somewhere in the sell zone, you start seeing price starting to retrace a little bit. It's okay for you to take some money off the table, and set your stop loss to break even. So that's why I'm saying like 20 pips a day, 30 pips a day. You can do that, especially on a pair like gold where you just need to get in and get out. But if you're not, if you're not batting over like 60 to 70% win percentage, the losses are just going to negate all your wins because your pip count is so small.
Yeah.
You see what I'm saying? Now, something like EU, a 20 pips per day is amazing, but if you're trading like gold or something like that, you probably need to be riding it up until a certain point so that you can make sure that you have enough cushion for the next day or the
Yeah.
next trade. You see
You're
what?
risking more. You have to make sure your reward is more.
Yeah, it's
For
risk. It's risk reward too, but it's also being logical. Like if you see price starting to stutter, let's say you're on M15, right? Where's that one day at? I'm gonna go back here on gold. There's one day here. So let's say we were looking, right? And I was like, Cameron's marking up his chart, right? And you see the day is doing this. All right, hold on. Let's say you marked it up here. Okay. Imagine you can't see all of this right here. Okay. So you're like, hey, going into the next day, I'm going to be looking for price to get where?
the low risk.
In the buy zone, low risk buy zone, right? So imagine you're going to the next day. Okay. You're being patient. Now you see this, the market isn't perfect, but this is a nice W right here. It's pretty much, it's to the buy zone. It's past the equilibrium, right?
Mm.
Okay. We don't want to take anything past equilibrium. If it's a little past equilibrium, close to the buy zone, that's still good. Okay. You don't think that you have to be perfect all the time. It's okay. So you can take a chance. So let's say you see this candle go up. You say, cool. You went down your M5, M1. That's a 20 pip stop loss on gold, right?
Mm.
And you're confident because you already know you're going to target this high. So
Mm.
we got to this high. Let's imagine you're riding it up. You're riding it up. You're riding it up. When you get to this point right here, go ahead and take profit. Go ahead and take 75% off the trade, 80% off the trade, because
Mm.
at that point, you've already made your money for the day. You've already made a good amount of
Yeah.
profit. And then what happened? Price went all the way back down, right?
To your original plan.
Exactly. And imagine that you didn't take any profit off the table. So that's why I'm saying, like, you have to target structure. Don't target the pips all the time. It's okay to take your money here and there, but practice trying to take money as structures because you have to trust yourself. Yeah, more often than not, it's going to work out in your favor. I'm telling you, if you just trust yourself. So just
And
do, yeah. Does that kind of clear some things up for you?
yeah, yeah.
Okay. All right.
And I see Jeff also on his analysis, he takes levels into consideration, but you say levels is not that important.
I can't. There's some noise in the background. It's kind of hard to hear. Sorry.
Ish. Okay. I see in Jeff's analysis, he
Uh huh.
takes levels into consideration, but it's not important.
I still can't. It's like a lot of sounds in the background. I don't know if it's your
I can also
microphone.
I can also hear it.
Okay. That's a little
Um,
better. Yeah.
okay. Jeff takes levels into consideration with his analysis, but
Mhm.
you say it's not that important.
Levels aren't important at all. I'm gonna tell you why. So um, let's go back to the chart real quick. I'm gonna share it one more time. So the reason why levels aren't important is because it can vary. So imagine this area right here. You see from this range to this range.
Mm-hmm.
This all technically could have been level one down here, level two, level three, right?
Yeah,
Where's the you're gonna be and at that point, what are you doing based upon strategy? You're looking for reversals, right?
yeah.
But what did price do? Shot all the way up, right? Held
Mm-hmm.
consolidation for 1, 2, 3, 4 days, almost a whole week, right? And price shot up all the way through that. So you need to follow structure. Unless price came down here, there's no reason to be looking for a bearish setup
Mm.
because at that point it broke a lower high, and at that point you can start considering sells. Don't try to catch the tops and the bottoms because you're going to get killed. Okay, you need to follow. You need to follow where price is going on the daily, and then come down to the H1 to get your structures. Okay, the levels is good for like a confluence with your structure. But a lot of times you'll see people, and I'm sure you've seen people like in Telegram chats or um, other places saying, "Oh, it's level three, it's going to drop. RSI is above, it's a sell." And then what happens? It just does the opposite of what they wanted to do. The levels is tricky, and it's going to trip
Mm.
you up. The levels is more for, um, I'll just say it's more for like a beginner who isn't isn't too familiar with liquidity concepts and market structure. Okay.
Mm.
Um, the more you have on the chart, the more it's going to confuse you. The
Yeah.
more EMAs you have, the RSI, the TDI, everything like that is there. It's going to confuse you.
Mm.
Focus on market structure and where price is going. That is literally 80% of what you need to know. The other 20 is going to be your psychology and your timing of the market. and your timing is already going to be figured out because you have the Fibonacci to tell you where to get in, and you have my
Yeah.
settings already. So, my personal preference is look, be on the charts at the same time and end at the same time every day. That way, you can expect a certain amount of volume in the market, and you understand what may or may not happen at a certain time. Okay, so does that?
Like gold, I've been monitoring it. It usually trades New York session,
Yeah, I
which
do the
is the
same.
best.
And the reason New York session is the best, in my opinion, is because I can use London as a reference to New York.
Mm.
So this is Asia session right here, right? This blue box is Asia session. Okay, nothing happened.
Yes.
This is London. What happened? Nothing. And then this is NFP, but New York is shot all the way up. Okay, same thing here. Asia session, nothing's really happening. This is London right here. Not too
Mm.
much happened, but we can see we made a low in London, and then we respected this low the whole time. You see how it spiked, 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 and then it shot up. The same thing. This has been bullish the whole time. Asia session, London. London, we hit the low risk buy zone, but then we dropped all the way down. As soon as we waited for New York, what happened? We got a strong candle right back up, and we can take that to the moon. You have to know your pair and what session is going to move too, okay? Because not
Yeah.
every pair is going to move the best in New York. So your USD pairs, like your EUs, GUs, all of them are able to move in New York. If you're trading something like um, maybe like GA or something like that, it might not move as well just because there's no US currency attached to it. Okay. So because all the US banks are open Monday through Friday around New York 8:30 New York time. Does that make
Okay.
sense?
Yeah. And
Okay.
if you have drawn your what you call it, your your structure, your support and resistance basically.
Mm-hmm.
If you have drawn it and the ADR of the pair will not reach it, do you hold it or
You're saying if price gets to a support or resistance level, do I hold it?
before say the ADR is 50
Mm-hmm.
and your target is say your next target is on 100 pops.
Okay.
So we don't reach it in that day. Do you hold it?
That's when if it gets to a certain level, that's when you take profit off the table. So if you're in the money, just go ahead and take a half off or 3/4 of your price off. Okay. And then set that to break even and then just forget about it. If it hits your target, it hits your target. If not, you got the bulk of the target, you got the bulk of the money for the day.
Mm.
You know? So that's when you can get those crazy gains is when price moves into the next day. So let's say for example, you took a trade here, right?
Mm.
And let's say you took profit right here, okay? Just say you took 50% off, you set your stop loss to break even. Price never came back to here. So you're still making money, but you still take another trade, right? So now you're stacking on money on top of money. And then the same thing, now it moves up even more. And what are you doing? You're just making profit on top of profit. So
Mm.
yeah, so I mean you can take profit when you feel comfortable. I mean if you like taking at the ADR, that's cool. Um, but yeah, just take profit whenever you feel comfortable and when it's logical. That's really the best advice I
Yeah.
can give you.
Yeah. And my win ratio is improved since I started just cleaning up my charts.
Okay, yeah,
I've
definitely.
had a lot of mess.
Yeah, but don't focus too much on win ratio because a lot of times I'll cut my trades just because if price starts going like in drawdown,
Mm.
I'll cut half of the trade off. What's more important is are you making money? Point
Yeah.
blank. Win ratio is cool. People like to say, "Oh, I got 80%," but are you making money? You know, you could win 8 out of 10 trades, but those 2 trades you lost took you to break even. What's the point? You know.
Yeah.
So don't focus too much on win ratio. Focus on managing your money, managing the trade, and getting good entries, and you're gonna be just fine, man.
Yeah. Yeah.
Yeah.
You've cleared up a lot of stuff.
Oh yeah, man. I was impressed. I saw your charts. I saw you marking your charts up. So I was definitely impressed with you. So I hope this helps you like take some of that clutter off your charts. And it's scary at first. Taking the TDI off and taking the EMAs off. It's scary. Um, so just do it slow. You know, take 0.01s if you have to, just to get comfortable looking at pure price. I would say just forget about the levels. Just focus on market structure and where price is going on a daily basis. Okay,
Yeah.
so that's really my advice to you because when I was doing levels, I used to always be like, "Oh, it's about to reverse here. There's no way it can keep going up. Level three, TDI is
Mm,
pointing down, everything's lining up, and then it just kills me." And
yeah.
as soon as I took those things off, I think I was struggling for about 2 weeks and I was just scared to do it. I would take TDI off and throw it back on. I take the EMAs off, throw them back on. But when I really committed to just not having anything on the chart, it's the best feeling in the world because you you don't feel handicapped anymore. You don't feel like there's
Yeah.
nothing in the way except you in the chart.
And how long have you been trading naked charts?
I've been trading since early 2017. Um, I've known about Forex since 2012 though, but I've actually been trading since like 2017. The FX Mindshift group where Jeff's at, I was there the very first day. So ever since he's been around, I've been around. So yeah, he was the first person I reached out to, and he's the best. So yeah,
Yeah. And what pairs do you look at your New York session? Do you have specific pairs?
I trade. My pairs are gold, EU, and then I switch from a third pair. Sometimes I'm GU, sometimes
Mm,
I'm GJ, sometimes I'm GA, but my main two pairs are gold and EU.
yeah.
So that's mainly what I trade.
And EU, GU, and yeah, EU and GU goes hand in hand, isn't it?
Yeah,
Mostly.
yeah, EU and GU sometimes they follow each other. Sometimes they correlate. There are times where they're doing opposite of each other, but a
Mm,
lot of times you can use if you're trading like EU, you can kind of see what GU did and kind of use it as a crutch to see what it may or may not do. But honestly, in my opinion, you don't even need the correlations either. So they're helpful. Everything's helpful. Levels are helpful. Correlations are helpful. Sentiments helpful. But you really don't need anything but the chart and your knowledge, honestly.
yeah.
Because like I said, the less the you can know a lot, but once you start knowing a lot and applying it to a little bit, that's when I feel you grow. Because you're not looking everywhere. You're not doing too much. You know what you're looking for. You apply it, and then that's it.
Mm.
So all that stuff it's just confusing. I mean, even news. Only news I look at is FOMC and NFP. I don't care about really anything else. Maybe some Brexit news here and there, but I don't pay attention to that either. So
Mm.
it's just there's too many things to worry about already with Forex for you to be having to worry about what everybody else is doing, what's his pair doing. Does my TDI say that? There's too much going on. You're already putting your real money on the line and you're already battling against banks and everybody else in the world. So it's just simpler and it's just more peaceful if you just focus on what you got going on, in my opinion.
And if you've checked your bias, say on the daily going up, you don't trade back, isn't it? You don't.
You can counter trade, but I personally I've stopped doing that myself. I only like trading with the trend
Mm,
at this point because most counter trends are only going to get you a 1-to-1 or a 1-to-2 at most, unless you caught the full reversal, which doesn't happen a lot. You have to be your timing has to be perfect for that. So a trend trade can get you 1-to-2, 1-to-3, 1-to-4 on the regular. So in my opinion, there's really no point of me counter trend trading because I'm taking more of a risk
mm,
than if I just go with the flow than for making money. That's what we're all trying to do.
yeah. So you'd rather wait until it comes into where it's supposed to go,
Exactly.
and
What
then
like
go.
yeah, the same way I showed you on the daily for the targets. I'm just trying to trade. I'm just trying to be with the banks. I'm just trying to be with the big dogs. I just want
Mm,
to trade where they're trading at, and that's it. I mean, counter trend trade is cool, but I mean, it's just more of a risk. That's all. You just have to know what your risk is. I just personally think if you're going to do a counter trend trade, just go ahead, get your 10, 15, 20 pips and just get out. There's really no point of trying to do any more than that.
Mm.
Yeah. Yeah.
Yeah.
Okay.
No, it's been great. Thanks for clearing up a lot of things.
Oh, no problem, man. Thank you for reaching out, man. I appreciate it. I know I'm not like a big channel or anything. I'm really not trying to be, but I'm glad that what I've shown has been at least helping you a little bit. And
Yeah.
maybe we can do this again sometime.
Yeah.
If you have any questions, you can email me. You already have my email. But man,
Yeah. Great to see. Yeah.
I wish the best for you, man. Hopefully, and if you get confused on anything, don't hesitate to reach out either. Okay.
Yeah. Thanks for your support, man.
No problem, man. Best of luck to you, man.
Thanks.
All right. Take care.